please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, it is turning out to be a sluggish session, so no doubt about that. The advanced decline ratio is also nothing to write home about. But if you're talking about specific stocks, it's interesting because we do have something like Quality, which is surging. So that stock is up around 6% odd. In fact, it's had a great month. Quality is up around 20% odd on a month-to-date basis. So that one's doing well. And even something like a Stride Shasun, they received an approval for an HIV drug earlier in the morning. And it is an important opportunity for them because there are only two players in that particular segment. So that would be an important opportunity. Maybe around $15 to $20 million is what at least analysts are estimating. Those bipole results and what's happening there, those updates are flashing on your screen. So do keep an eye out on that. But let's move on. We haven't seen the end. In fact, we may be at an early stage of the trade war. That's the word coming in from the former RBI Governor Raghuram Rajan. In an exclusive conversation, he adds that the US Fed is likely to hike 3 to 4 times this year.
Given the recent news on Tillerson, it's very hard to predict what this administration will do, both for the good and the unpredictable. My worry is that the big issue, which is the trade imbalance with China, hasn't been addressed as yet. And there are measures that are floating through Washington, especially using Section 301 on unfair trade practices, which are still to be seen. And those have to do with intellectual property and so on, issues which are very dear to the Chinese heart. So my worry is that we haven't seen the end of this process yet. In fact, we may be at an early stage, and there is more to come. So I would not hold my breath saying, I would not rest easy saying that we're done. I think there's more to come. The jobs data also said that wage growth was not as strong as previously feared. So it had a good news, bad news effect. Good news, strong labor market growth, and the wage growth that some people want to see more of wasn't huge. But it also brought comfort to the Fed that their pace of tightening was reasonable, but at this point not significantly behind the curve. So I think they will continue between 3 and 4 hikes this year, certainly one this month, which they've prepared the markets well for. There's a lot of leverage which has built up post-crisis. So there will be pain points.
All right, Raghuram Rajan there, talking about trade wars and a bit about a couple other things as well. I mean, the market is down a little bit more. We're down 55 on the Nifty now. We had Ramdev Agarwal of Motilal Oswal earlier in the day on the show, and he put out his opinion as far as the year is concerned for markets. That's 2018. He thinks while some stocks, of course, may do well, you may make money, but generally speaking, at an aggregate level, you're more likely than not going to be lower. He did say that there could be about a 10% rough correction from where we are at this point. Listen to it.
Market was overextended in terms of valuation, and earnings were not catching up. There were a lot of issues. The trigger for correction, and the correction is, if you see the correction, there are a lot of winners also in this period. Yes. There are a lot of losers, of course, impacted by this scam and all, but a lot of stocks are doing well. And good thing is that at this point of time, a lot of segments of the economy are really firing well. I think if you look at year on year, I think it will be a nice year of correction. Stocks will definitely do well. That you cannot stop, individual stocks. But when it comes to discussion on index, there's so many things going up and down, So I would think that plus minus 10% from here.
Okay, and we're going to get you that opinion through the day. We have Ashwini Gujral joining in now to talk about the technicals of the market. Well, Ashwini, the Nifty is currently down around 58 odd points. We have the Bank Nifty, which is down 200 as well. Your strategy?
It's not often when you come on air and things are just about to happen. I think sluggishness is not the word you'll use for the second half, because today State Bank, ICICI Bank and HDFC Bank, also Axis Bank, are facing large amounts of selling early in the morning, and also that has taken the Nifty below 10,370, which was yesterday's low. So my sense is that now the resumption of the downtrend has started, and possibly this sort of selling, obviously by foreigners because they are the ones who hold these private banks, should accentuate as we go into the close. So even right now it's a good time to get short on Nifty, Bank Nifty, etc., because when large stocks begin to turn, I think the indices and finally everything else also turns. There's a bit of rallies, a small rally on small PSU banks. I don't think that's going to last a whole lot. So the idea should be to get prepared for a weaker second half. All the rallies we had were choppiness till now for the last couple of hours. As far as individual stocks are concerned, Asian Paints is a sell with a stop of 1150, target of 1100. HDFC Bank is a sell with a stop of 1865, target of 1820. Natco Pharma is a buy with a stop of 760, target of 795. Today, since morning, larger stocks are coming off, whereas small cap and mid caps are going up. That's often a scenario which does not tend to last. So I think the selling is resuming, and people who have longs at least should cut those long positions.
Okay, that's pretty clear as they come. We have some questions. Kamlesh is writing in 10 shares of Maruti. He has at 9,400 rupees. Wants to know what he should be doing. Stocks are about 8,700 or so. Ashwini.
It's not a short-term trade. I mean, nothing's going to happen tomorrow or day after. What he can do if he has capacity is buy another 10 shares, average down. Maruti is a kind of stock which at some point, whenever the bull market stroke rally resumes, could see levels higher than 10,000. So this is one good way of investing by retail, etc. You choose a good blue chip stock, and as it comes off, keep averaging in.
Okay, second one is Jagdish, 1400 shares of Nalco at 80. Ashwini wants to know if he should hold or sell that stock.
Key to commodities is, don't try to get in, when you hear good news. So if I were him, I would probably move to a larger metal stock. If he's willing to move to other stocks, maybe even get into a mid-cap IT stock, because if globally also things are going to remain soft, then metals are also going to come under pressure.
Ashwini, thanks very much. We'll speak about an hour later once again. Thanks indeed for the calls. I mean, the market's picking up pace now. We're down 62 points. Started with about 46 odd point correction at 11. 30 minutes down, we're down 15 odd points more. 10,364 is where the Nifty is at. We take a very quick break. We've got a couple of stories that we want to focus in on as well. And we're going to focus on Fortis more specifically. We've been on top of the story in terms of bidding, etc. More details in just a bit. So we're still down 60 points, 61 odd points or so, 10,366. Bank Nifty is down about 0.8, 0.9%, 213. Ashwini was pointing out how, although the first few hours have been kind of sluggish, it's unlikely it's going to remain the same way in the second half. We could pick a trend and most likely on the way down. One name which is sort of holding up, it's corrected quite a bit along with the market recently, but it's up about 4.5%, is Fortis, 160 odd rupees odd is where it is trading at. The fight for Fortis, as we understand it, has intensified. We told you last month that IHH is back in the race for buying the hospital chain. Nisha, who got us that story, is back with us with more and the latest. Nisha, over to you.
Thanks for that, Prashant. Of course, sources with direct knowledge share with us that clearly IHH is looking quite aggressive to buy out Fortis. And it has been in talks with several large shareholders, considering that there is now no promoter holding or a large stake with any one particular party in Fortis. So Yes Bank, with 17% stake in the company, is one of the key shareholders. And what I do gather from sources with direct knowledge is that is also the key decision maker for Fortis deal. So I do gather that IHH is in talks with Yes Bank to buy out the stake. The prices and all those negotiations are going on. If Yes Bank agrees and stitches up a transaction with IHH, then some of the other large stakeholders will also rally behind it, is my understanding. At the moment, there is no clarity, though, that IHH is a clear winner of this particular transaction. But if it were to happen, it may trigger an open offer for this particular company as well. But must remember that TPG-backed Manipal was in advanced talks and it's still there. So if there is a fight with IHH, then Manipal with TPG backing would definitely also jump into the fray. So it can be a highly contested competition as well. But remember that there are many overhangs, many clouds that have really surfaced for this particular transaction. And SFIO investigation, remember, is the last hurdle because of which the Manipal TPG transaction to buy out Fortis did not happen. So all those have to be kept in mind. But definitely there are two interested players in the market for Fortis Healthcare, and that's why that stock is up.
Nisha, just a quick point. Would the legal side of things overwhelm what's happening on the deal side?
That's true, Prashant, and that's the reason why on 4th of March, this particular transaction did not get announced. Though my sources had said that, TPG and Manipal were all set for this particular transaction, but they held back because of this SFIO, investigation. And Luthra's report on this investigation is going to be one very important aspect, unless there is some sort of, disentangling of the new buyer really comes in. But remember that if TPG Manipal does the transaction, it will be a merger. So it will be a long drawn process, which will give them enough time to get out of any sort of liabilities coming because of these investigations. But an IHH going in for such a large open offer will be very gutsy at this point, given the other legalities surrounding this particular company.
Okay, Nisha, thanks very much for that. In fact, the Luthra report, which is actually a board-initiated report in order to assess the financials of the company and the allegations of siphonings of funds, etc., by the promoters, is exactly what the street is also watching out for very closely. We'll take a break now, but up next, we'll get talking about the fundamentals of the market. We have Gaurav Mehta of Ambit Asset Management. For the correction in the markets, and one of the reasons is probably flashing on your screen at this point in time, some preliminary results coming in from the buy polls. We have Anuj joining in to give us an update in terms of the change of wind which might be taking place.
Yeah, so just a caveat here, of course, these are still early numbers, and of course the fact that the voting percentage was very small. But in Gorakhpur, if Samajwadi Party is now leading, Gorakhpur was supposed to be a cakewalk. That's of course the CM's constituency, right? That was supposed to be a cakewalk. The importance of these three by-election seats is because for Uttar Pradesh, you have Gorakhpur and of course Phulpur. Gorakhpur is CM's constituency, Phulpur is Deputy CM's constituency. So SP and BSP have come together only as a test case for by-polls. We were discussing with Shobna Bhartia also earlier, because the template for 2019 is there going to be united opposition? And if that is the case, then in UP, where the BJP won 73 out of 80 seats, in that case, is this going to be a bit of a chink in the armor? So that's why Gorakhpur and Phulpur were important. Gorakhpur was supposed to be a cakewalk for the BJP. Now, Samajwadi is actually leading by 1,000. This could change. There's belief that Gorakhpur still should be BJP's, but Phulpur is now becoming really interesting, where the Samajwadi Party is actually leading by almost 10,000 votes. So that, I think, would be a bit of a stunner, because that's, again, Deputy CM's constituency. But again, two caveats. These are still early numbers. We'll find out. And two, the voting percentage was very low. And these are by-polls. So we should not take too much out of it. But for now, I think that's an added sort of negative for the market.
Anuj, thanks very much for that. So we'll keep an eye out on what happens as far as those two by-polls are concerned. Let's turn our attention to the market, which is now down about 70 points or so. 10,357 is where we're at. By the way, the Nifty Bank is now down about 0.95%. Across all indices, things are looking a little bit worse from even, say, 15 minutes back. We have Gaurav Mehta of Ambit Asset Management now joining in on the show. Gaurav, thanks very much. Good to have you here. I just want to put out a statement which we got from Ramdev Agarwal of Motilal Oswal. He was on air earlier in the day. He said it's going to be a nice correction. Through the year, indices, basically he said it's going to be tough, a tough 2018. markets are going to be lower broadly at an index level, maybe even 10% from here. Of course, stocks, even in bad markets, you'd find if you're skillful, you can pick stocks which do well. But do you broadly agree with that description about how the next many months are going to be?
So I think one thing that I clearly agree on is the fact that it's going to be a choppy 2018. So volatility is going to be high. And I think the reason volatility is going to be high is that unlike the last couple of years where global interest rates were low and hence there was this artificial support of liquidity which was curbing volatility, I think that is not the case anymore because globally rates are rising and as a result money is becoming costlier, and as that happens obviously liquidity will not be as abundant as it was so far, and that in turn will lead to bouts of volatility. However, I also think that the reason these rates are rising in the first place is because economies are getting better, not just in India but across the globe. Initial sort of prints from India also suggest that there is sign of a cyclical recovery that's underway. If you look at the slope of the yield curve itself, it's as inverted, it's as steep as it has ever been over the last few years, which again suggests that the economy will keep getting stronger as you move along. So I think all of that put together would mean that corporate earnings will rise. They haven't risen for a good several years in the past, but I think they will now rise. And as earnings recover, I think markets will also trend higher. So I think, versus past, I think what's changed is that volatility will stay high. But in that high volatility period, I think broadly the market trend should still stay up. I think it could be very similar to the 2004 to 8 period, where the economy was doing well, the corporate earnings were doing well, and as a result markets were doing well. But because during that period cost of capital was rising, volatility was high. So in spite of an uptrending market, you had a very volatile market. Okay. So I think that's the best script or sort of the best period that I would look for reference for the current year as well.
Okay. Gaurav, obviously, we are also singing to the tunes of what's happening politically as well. We have a whole host of state elections coming up, and we have the bipolls, which probably the markets are reacting to right now as well. Your sense, particularly on the bipoll results, because now we understand that maybe the Samajwadi Party could be leading in Gorakhpur versus the CM. So your sense in terms of whether these actually impact portfolios, impact the market, impact your assessment?
So clearly, I mean, from a political risk point of view, given that this is an event-heavy calendar, I think that will create bouts of volatility. But specifically talking about the near-term event that you are referring to, the bipolls in UP, I don't think, I mean, historically bipolls have had any predictive power in sort of deciding what the eventual political fate of a particular party is in that city, in that state, or in that country. So I would take these bipoll results with a fair degree of pinch of salt. And I think one reason for that, as Anuj earlier pointed out, is the fact that the polling percentages themselves are so low that it's difficult to extrapolate into what that might eventually mean. So I think, globally things are weak today. The bipoll results obviously in that sense adds to the negative sentiment, but I won't read too much into it.
Right. Gaurav, where are you focusing your energies really in terms of groups of stocks, businesses?
Right. So I think, in this market correction, especially with respect to what's happened with public sector banks, I think as a rub-off impact of that, a lot of good quality financials, especially in the private sector, have also come off. Especially the private sector lenders that are focused on corporate and pro-economy activities. I think those are the ones that have taken quite a bit of knock. So I think that's one space that's looking attractive. As the economy recovers, I think private sector lenders should do well. You could also look at pockets in the NBFC space where the sector where there is not that much of an asset liability mismatch, so that even in a rising yield scenario, the sort of business is intact, and especially those NBFCs where they are lending to, let's say, the auto sector or the commercial vehicle sector, things that will move up as the economy does well. So I think pockets of NBFCs should also do well. I think another pocket that's become interesting in this correction is the home building space. So clearly, I mean, there's been a double challenge. A, obviously real estate demand has been weak, and B, this e-way bill implementation, which everyone thought would lead to a shift from unorganized to the organized space, that e-way bill implementation has been delayed. But I think now with e-way bill implementation being pegged on 1st April, And I think with disruption around RERA largely behind us, you should also see a bit of demand recovery, especially from end user driven segment. So I think both of them put together, a shift from unorganized to organized, as well as slight uptick in demand, and along with the recent correction that you have seen, I think makes home building, especially players in tiles, in plies, in laminates, in pipes, I think those pockets also have started looking attractive.
All right, Gaurav, we're going to wrap up the conversation on that note. Always a pleasure listening to you. Thanks very much for joining in and talking to us. So that is the view coming in from Ambit. Need to take a break now, but we'll be back with more news and stocks in focus. Welcome back. Well, 10,368 is where the Nifty is at, and maybe what we are seeing from the buy polls election and what is coming in from a couple of results is probably impacting sentiment a little bit. We have some data coming in on Fortis Health as well, so do watch out for that. That stock is extremely active today, up around 4.4%, and just look at the kind of volumes which are being traded on that one as well. But overall, sentiment still very subdued on the markets. We have an advanced decline ratio which is weak, and we have the Bank Nifty which is down around 0.8%. It's a wrap on Trading Hour. Stay tuned, halftime report up next, and the WPI figures as well.